It's not like when the United States exports inflation to another country that hoards dollars. It's not like that inflation goes away. It's still there, right? And when the dollar hyperinflates at home, then what happens to all these other countries that were hoarding dollars the whole time, and all of a sudden they see that the dollars aren't worth anything? Well, they reverse the process very quickly. They sell the dollars back to the United States, and everything that was exported, all the inflation that's been exported, just gets dumped onto U.S. shores very quickly, and then the dollar.
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
David Morgan, a well-known figure in the precious metals market, has provided a thought-provoking perspective on the potential for a significant surge in the price of silver to $1,200 by 2024. His views offer a fresh look at the dynamics shaping the silver market, alongside the broader economic factors influencing precious metals. Morgan's insights are especially relevant for silver stackers, individuals who accumulate silver as a form of investment or hedge against economic uncertainty. According to Morgan, the potential for early retirement could become a reality for those holding substantial amounts of silver, should his predictions come to fruition. Morgan's analysis is grounded in a comprehensive understanding of both the macroeconomic landscape and the silver market's intricacies. He points to the Federal Reserve's monetary policy, particularly the timing and impact of interest rate cuts, as a critical factor to watch. The anticipation of rate cuts by the Fed has historically had a significant impact on precious metals prices, with silver being no exception. Morgan suggests that a reduction in interest rates could diminish the dollar's value, making silver an attractive alternative for investors seeking to preserve wealth. Moreover, Morgan highlights the growing demand for silver in various industrial applications, from solar panels to electric vehicles, which could further tighten the market and push prices upward. He also addresses the supply side, noting the challenges in ramping up silver production to meet this rising demand. The combination of robust demand and constrained supply is a classic recipe for higher prices. Morgan's perspective is not without its detractors, and the precious metals market is notoriously difficult to predict with absolute certainty. However, his analysis is bolstered by a detailed examination of historical trends, current market conditions, and forward-looking indicators. By drawing on a range of sources and employing a nuanced approach to market analysis, Morgan builds a compelling case for his $1,200 silver price target. For silver stackers and investors alike, Morgan's insights offer a roadmap for navigating the complexities of the precious metals market. While the path to $1,200 silver may be fraught with volatility and uncertainty, Morgan's analysis provides a beacon for those looking to capitalize on the potential opportunities ahead. As always, investors are encouraged to conduct their own research, consider their financial goals and risk tolerance, and consult with financial advisors before making significant investment decisions.
Part are, excuse the expression, up to their gills in metal. And a lot of these, bigger outfits use the carry trade. So in other words, they are actually financing the dollars from the bank to buy the metal or buy it back, let's say. They have to make a two-way market. And so they have to borrow pick a number, 5%. I don't know. It depends. Depends on their credit line. Depends how long they've been in business. But it's a cost. So the longer that the market stays slow on the actual physical retail market, the more carry costs they have to endure. So this motivates them to, try to mitigate that problem. So yeah, it is unfortunate that it's not, driven by physical demand like it was, early days. I don't have time to listen to all of, Andy Schechtman's interviews, but I remember when the retail market was so hot and the premiums on the Silver Eagles were extraordinarily high. And, I was trying to hint and, I'm free market. You're going to pay, $10, $15 premium for a coin that's, $20 or $22. I mean, that's like a 50% premium. I mean, if you want to do it, that doesn't make good logic to me. But regardless, the point I'm making is that hot retail side has subsided. And that's not good for the market. There's several aspects of the silver market, but I try to define it as the silver market is defined by paper. And the paper contracts are for 1,000-ounce commercial bars. Is the retail silver demand important? You bet it is. But it's really not the best guidance for the silver market. I mean, if you look at guidance on the silver market, you look at the silver bar market, and if the silver retail market is so hot that more commercial bars are going to the mints because they do. I mean, I've been through the Sunshine Mint top to bottom, I don't know, 3 or 4 times. And, you see these huge pallets of commercial bars. And what do they do with them? They turn them into 1-ounce coins. That's what they do. And so, but that's the silver market. I mean, I'm trying to express here is that you could see a very hot retail market and make the mistake that the silver market in total is extremely hot. And that's really not the case. And I try to, I'm not trying to split hairs. I'm just trying to give some calmness and some perspective and a lot of experience to those out there that get hung up on a part of the market, believing that's the total market when it is not. I hope I made sense there because it's important to know and to try to not get too wrapped up or too excited in an aspect of a certain market and then maybe make a...
Morgan points to several key factors that are expected to influence the silver market significantly in the coming years. Understanding these elements is crucial for investors aiming to grasp the full scope of why silver could hit the remarkable milestone of $1,200. Industrial demand as a catalyst. One of the primary factors Morgan emphasizes is the exponential growth in industrial demand for silver. The metal's unique properties, including its conductivity, reflectivity, and antibacterial qualities, make it indispensable across a variety of industries. From electronics and solar panels to medical devices and automotive components, the demand for silver is not just steady but growing. With the global push towards renewable energy and electric vehicles, this demand is expected to increase significantly. Morgan points out that this surge in industrial demand, set against a backdrop of relatively inelastic supply, could be a critical driver for higher silver prices. Monetary policies and inflation expectations. Another pivotal area Morgan examines is the impact of global monetary policies on silver prices. With central banks around the world, particularly the Federal Reserve, adopting loose monetary policies and maintaining low interest rates, the stage is set for weakened fiat currencies and heightened inflation fears. These conditions historically drive investors towards precious metals like silver as a store of value. Morgan suggests that as inflation expectations become more entrenched, the appeal of silver, both as an investment and a hedge against inflation, is likely to grow, further fueling its price rally. Supply constraints and mining challenges. Morgan also sheds light on the supply side of the equation. He notes that silver mining has faced several challenges, including declining ore grades, geopolitical risks, and environmental regulations. These factors contribute to slower growth in supply, even in the face of rising prices and demand. The pandemic has further exacerbated these challenges, with disruptions in mining operations and supply chains. Morgan believes these supply constraints play a critical role in his bullish outlook for silver, as they could lead to a supply-demand imbalance, pushing prices higher. Investment demand and market sentiment. Lastly, Morgan discusses the role of investment demand in driving silver prices. He observes a growing interest in silver as an investment, with increased allocations to silver in portfolios, whether through physical silver, ETFs, or mining stocks. This investment demand, coupled with positive market sentiment towards precious metals, could amplify the upward trajectory of silver prices. Morgan suggests that as more investors recognize the potential for silver in the current economic environment, this demand could provide further momentum for silver's rise to $1,200. In summary, David Morgan's analysis in this step highlights the multifaceted drivers behind the potential surge in silver prices. From industrial demand and monetary policies to supply constraints and investment demand, each factor plays a crucial role in shaping the silver market's future. For investors and silver stackers, understanding these dynamics is key to navigating the opportunities and risks in the precious metals market.
Yeah, it's a priceless gift. I mean, it's something that's not very common in the world history. I mean, there's been so many authoritarian type of governments that really put a lot of control over the people. You can get into dictatorships, you can get into kingships, you can get into all kinds of things. And it's really more of a belief system. Of course, if you have the power of a gun, then of course you're able to enact that authority, because if you don't stay in line, you've got a price to pay. It could be your life in some instances. So it's very sad, in my view, as far as, we're supposed to be human beings. We're supposed to be humane. I mean, most religions say, thou shalt not kill. And you take that to the extreme, it's not only kill each other, which happens all the time, but even maybe killing animals. I mean, you could go that far and at least question whether that's what it means. I'm not a vegan, but I just want to point out that, the rule books are pretty clear and pretty awesome, in my opinion, but we don't follow them. So what good are they? It's like mandating certain things that might be for the public health, but if no one does it or they don't implement what they say they're going to do. I mean, look at the Clean Water Act, for example. Sorry, I'm on a tangent. I'm going to stay here for a second. You have a Clean Water Act, so everyone in the United States is guaranteed clean water, and then fracking starts to take place. Well, we are going to eliminate the Clean Water Act in areas of fracking because just in the off chance that there's a 0.01% chance that fracking is going to pollute the water, we don't want to get sued. We're not going to be liable for it. And it was a much greater percentage than the one I cited. But you get the idea. Universal deceit. I mean, you are being told one thing and the actions are almost the exact opposite. And this is the world we live in. So, deal with it. I mean, the best way to do your best life is to control what you.
The focus shifts towards understanding the broader economic context and how external factors could contribute to a dramatic rise in silver prices. Morgan discusses several global economic trends and events that could act as catalysts for silver reaching the unprecedented level of $1,200. The global shift towards renewable energy. A significant part of Morgan's rationale hinges on the global shift towards renewable energy and sustainability. As countries and corporations commit to reducing carbon emissions, the demand for renewable energy sources like solar power is skyrocketing. Silver plays a crucial role in the solar industry, particularly in photovoltaic cells, where it's used for its superior electrical conductivity. Morgan points out that this green revolution isn't a short-term trend, but a long-term shift that could sustain high levels of silver demand for decades. The investment in renewable energy infrastructure worldwide is expected to be a major driver for silver, especially as new technologies emerge and existing ones scale up. Technological advancements and silver's role. Morgan also delves into the role of technological advancements in driving silver demand. Beyond renewable energy, silver's antibacterial properties are being leveraged in medical applications, and its conductivity makes it indispensable in electronics, from smartphones to electric vehicles. As technology evolves and becomes increasingly integrated into everyday life, the demand for silver is expected to grow accordingly. Morgan believes that the pace of technological innovation, coupled with silver's essential role in many of these advancements, presents a bullish case for the metal. Geopolitical tensions and economic uncertainty. Another critical aspect Morgan examines is the impact of geopolitical tensions and economic uncertainty on silver prices. In times of geopolitical strife or economic instability, investors often turn to precious metals as safe havens. Silver, like gold, benefits from this shift in investor sentiment. Morgan argues that ongoing tensions in various parts of the world, combined with uncertainties stemming from debt levels, trade disputes, and political instability, could lead to increased demand for silver as a form of financial insurance. This demand, particularly in the context of a weakening dollar and potential inflationary pressures, could significantly impact silver prices. The de-dollarization trend. Lastly, Morgan discusses the trend towards de-dollarization, the move by countries to reduce their reliance on the US dollar in international trade and reserves. This trend, driven by concerns over the dollar's long-term value amidst massive fiscal deficits and monetary expansion, could have far-reaching implications for silver. As countries and investors look for alternatives to the dollar, precious metals could see increased demand as stores of value and mediums of exchange. Morgan suggests that this de-dollarization process, although gradual, represents a fundamental shift that could bolster the case for higher silver prices.
And that's a cue for it to be inflated away into a hyperinflationary environment. Will that happen? Absolutely not. Or I'll say absolutely not. I'll be that bold because there'll be a new system right around the corner. So when these currencies fail, they fail, but then they reset and restart, and they have it usually gold-backed. I don't think they'll attempt a gold-backed digital currency initially. I think they'll try just to push over the system into a new realm where you exchange old for new, and there's no cash, and you go into a computer form or digital form only, and you got to get verified that you're you, and who knows what's going to go on. It's been cited by many people other than myself, but it'll probably be more Orwellian than you care to imagine. So the dollar won't be worth zero. It'll be worth, 0.07 cents. Who knows what it'll get to. But it will be an excuse for it to be a new system. And that's what especially the Christian community, among others. I mean, you're not be a Christian, but I mean, the Christian community certainly has looked at this for years as far as the mark of the beast and what does it look like and what are we going to have to do and how will we know and all those questions that come to the fore as we're getting near the end of this great Keynesian experiment that always fails. So I probably went on too far, but I'll tell you, it's a point in time that's very extremely interesting to live in. And also people like you and I that have basically raised our voices against the tyranny to say, look, the people really get to decide what money is. People need to be free. And if you have a system that dictates everything you think, do, and say, and you're scared to speak the truth, then you're in very interesting times. And to do my favorite quote, speaking the truth in times of universal deceit is a revolutionary act. So thanks for being with the revolution for so long.
David Morgan's insightful analysis. We delve into the intricacies of silver's historical performance and its correlation with global economic indicators, providing a comprehensive backdrop to understand its potential leap to $1,200. This historical perspective is crucial as it sheds light on patterns and triggers that have historically influenced silver prices, offering clues about future movements. Historical price movements of silver. Morgan meticulously examines silver's price history, noting its volatility and the significant rallies it has experienced in past decades. He references the late 1970s to early 1980s, when silver prices skyrocketed, partly due to market manipulation known as the Silver Thursday incident, but also because of high inflation rates and economic uncertainty. This historical event serves as a testament to how quickly silver prices can rise under certain conditions. By comparing the present economic climate, characterized by considerable monetary expansion, low interest rates, and burgeoning government debt, to that era, Morgan suggests a similar setup is forming that could propel silver prices to new heights. The silver-to-gold ratio. A key part of Morgan's analysis is the silver-to-gold ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has seen significant fluctuations, and moments when silver narrows the gap have often corresponded with strong rallies in silver prices. Morgan points out that the current high ratio indicates that silver is undervalued relative to gold. Given silver's dual role as both an investment and industrial metal, and considering the factors driving demand on both fronts, Morgan believes the ratio will adjust significantly in favor of silver, contributing to its price surge. Economic indicators and silver demand. Morgan also correlates silver demand and price movements with key economic indicators such as inflation rates, industrial growth, and technological advancements. By analyzing past periods of high inflation and rapid technological change, he underscores how these factors have historically led to increased demand for silver. With current trends indicating rising inflation and accelerated technological innovation, particularly in green technologies and electronics, Morgan anticipates a substantial impact on silver demand, pushing prices upward. The impact of monetary policies. The analysis further explores the influence of global monetary policies on silver prices. Morgan reviews periods of quantitative easing, low interest rates, and fiscal stimulus, noting their correlation with bull markets in precious metals. The unprecedented levels of monetary expansion in response to the COVID-19 pandemic, coupled with talks of further fiscal stimulus, are highlighted as factors likely to devalue fiat currencies and boost precious metals as stores of value. Morgan argues that these policies set a foundation for a significant reallocation of capital towards silver and other precious metals.
Going back a couple of years ago, I would pretty much guarantee you're going to get a correction and a large one at some point. I still think that's the greater possibility, but if you look at a true inflationary environment like, the Weimar or Venezuela or Zimbabwe or Argentina or any of these countries, the stock market just goes up and up and up and up until they reset. And so I don't rule that out entirely anymore. I used to say in advanced capital systems, the bond market was kind of governor in the whole system. So the debt markets would control with interest rates how valuable the money would be over time value of money. And that's kind of what Powell's trying to do now, but I think it's a little bit, too little, too late. I mean, if they throw in the towel, as I said earlier, the whole world knows how money works, that it's going to, I wouldn't say hyperinflate, but they're going the inflation route where they don't care about the value of the currency. On the other hand, if they stayed the course, maybe even raise interest rates more, then you start losing the value of the bond market, which is what runs everything. So bonds will have to be marked to market. And that means you're going to take a lot of money out of the market because a bond that says $1,000 face value has to be marked to market. And at current interest rates, that would be at 800, 700, 600, 500 in some cases. So that would probably be the most morally correct way to go about the problem. But I don't think that's the case. All the studies that have been done is anytime you don't have a guarantee of a backed currency, a gold or silver or both standard, that was the policeman on the currency that guarantees the value of it, it goes into an inflationary environment until the new system is initiated. So that's what I see. I see a new system being initiated. Will it be this year? No. Could be it could be as early as 2025. Back to the crypto thing. I mean, you've got your FTXs and all these things that have happened, and yet people still participate because they're not all scams, but a lot of them have no backing. So why would you be in a certain currency, a certain crypto, when it's based on nothing but a software algorithm, and yet people do it? And I get it. One is it's an alternative and it's not government. Two, other people buy it and push the price or the value higher. So why not? It's beating what my currency is doing in my country. But then you even have these exchanges that fail. I mean, you look way back at Mt. Gox, for example. I have one of my members write me, and I forget how many he had, but it wasn't a small amount, like 50 full Bitcoin. And then when Mt. Gox failed, he's getting like 1 of 50 back. I mean, it's pretty pathetic. So in free market, you want to play the crypto game, go ahead. I think asset-backed cryptocurrencies are the way to go if you're going to play that game, but that's my personal prejudice. So.
We pivot towards an in-depth examination of silver's role within the realm of emerging technologies and green energy initiatives. This perspective is pivotal as it encapsulates the burgeoning demand for silver, driven by its indispensable use in various technological applications, against a backdrop of constrained supply. Silver's critical role in green technologies. Morgan emphasizes that silver's electrical conductivity, unmatched by any other metal, positions it as a key component in green technologies, especially solar panels. With global commitments to reduce carbon footprints and transition towards renewable energy sources, the demand for solar panels is surging. This shift is not merely a trend but a global movement, with significant investments pouring into renewable energy infrastructure. Morgan underlines the fact that each solar panel requires a considerable amount of silver, and with the exponential growth anticipated in the solar energy sector, the demand for silver is expected to skyrocket. This surge is juxtaposed against a backdrop of relatively static supply, laying the groundwork for substantial price increases. Electrification and the automotive industry. Another significant driver of silver demand, Morgan points out, is the global push towards electrification, particularly within the automotive industry. Electric vehicles, EVs, rely heavily on silver for various components, including batteries and electrical connections. As countries and manufacturers commit to phasing out internal combustion engines in favor of electric vehicles, the demand for silver is set to escalate. This transition underscores a broader societal shift towards sustainability and green energy, further bolstering the demand for silver in the coming years. Technological advancements beyond energy. Beyond green technologies, Morgan delves into silver's role in the broader technological landscape. He highlights its use in electronics, medical devices, and even clothing for its antibacterial properties. These applications underscore silver's versatility and the growing demand across diverse sectors. As technology advances and becomes more integrated into daily life, the demand for silver, Morgan argues, will only continue to expand. Supply challenges. While the demand for silver surges, Morgan brings attention to the challenges on the supply side. He discusses how silver mining operations face numerous hurdles, from environmental regulations to geopolitical risks and declining ore grades. These challenges are not easily or quickly overcome, implying that supply may struggle to keep pace with the escalating demand. This dynamic of rising demand against constrained supply is a classic setup for higher prices.
A lot to comment on. I mean, it speaks for itself. The new high, of course, is really great for gold. And whenever you get a new high in a commodity or even a stock, I mean, it'll go higher and higher. I've explained many times about upward resistance, and when it is a new high, that's very bullish because everyone says, well, how high is it going to go? So there's not much selling pressure, or any new buying pressure pushes it higher. But at some point, there's what's called a a consolidation, or we call it back and filling. These are slang terms that mean that it hits a certain level and then it may fall off and rebuild a base and then move higher. And there's all kinds of charting patterns. You can look at a bull flag, a flagpole. I mean, there's all these terms, and a lot of them have high probabilities, but nothing's guaranteed. So having said all that, I'm very glad to see gold making new highs. And also, some of the mainstream media articles are almost humorous to me, like, we didn't expect this, or how come it's happening, or why is this taking place, and no reason to this, and on it goes. And it's simply buying pressure. I mean, there's been so much buying pressure from the central banks. And as I said, if you're unwilling to sell, any new buying pressure will push the price higher. So there's gold. I'm glad it's leading. Probably needs to take a breather here. My forecast in January was we'd see at least a 13% move in gold, based on a 13% for 2024, based on the 13% we saw in 2023. And that, came in around 2,000-ish. So 10% is 200. So, 10% is already at, and we're not in the season, really, the seasonality for gold that's the strongest. We'll move into that shortly, and then we're going to go into the summer doldrums, which usually is weak for the metals. But there are times it's not always. It's just a probability.
In this phase of David Morgan's analysis, we explore the financial system's evolving landscape and the pivotal role silver could play as currencies and monetary policies undergo significant transformations. As governments and central banks around the world continue to grapple with the economic fallout from the COVID-19 pandemic through expansive fiscal stimulus and unprecedented monetary easing, concerns about the long-term value and stability of fiat currencies are intensifying. Morgan points out that these macroeconomic maneuvers, while necessary to stave off immediate financial crises, are sowing the seeds for potential inflationary pressures and diminishing trust in traditional currencies. Morgan further delves into the concept of de-dollarization, a trend where nations and investors gradually move away from the US dollar in international trade and reserves. This shift is partly motivated by the desire to mitigate exposure to US monetary policy decisions and the dollar's fluctuating value. As countries seek alternatives to the dollar, precious metals, especially silver, could see increased demand as stores of value and mediums of exchange. This process, though gradual, represents a fundamental change that could support higher silver prices. Moreover, Morgan discusses the growing interest in digital currencies, including central bank digital currencies, CBDCs, and cryptocurrencies, as alternatives to traditional fiat currencies. While these digital assets offer innovative solutions to various monetary challenges, they also highlight the inherent value of tangible assets like silver. In a world increasingly concerned with currency devaluation and digital asset volatility, silver stands out as a physical, finite resource with intrinsic value, further bolstering its appeal as an investment. The burgeoning investment demand for silver, both as a hedge against inflation and as a critical component in green technologies and digital innovation, is another key theme Morgan explores. As more investors recognize silver's unique properties and potential for substantial price appreciation amid global economic uncertainty, investment flows into silver, including physical metal, exchange-traded funds, ETFs, and mining stocks are likely to increase. This phase of Morgan's analysis paints a picture of a world at the cusp of significant monetary transformations. With central banks navigating uncharted waters of monetary policy and the rise of digital currencies challenging traditional concepts of money, silver's role as both an industrial metal and a monetary asset positions it uniquely for potential price appreciation. As these macroeconomic and monetary trends unfold, the case for silver reaching $1,200 becomes increasingly compelling, driven by a confluence of demand from investment, industrial applications, and as a hedge against the evolving landscape of global finance.
Is every alternative media source 100% truthful? No, I don't think any of them are 100%. I think we get it wrong occasionally, but we do our best to be truthful. If I'm wrong and find it, I usually admit it and make a correction and tell everyone that's followed my podcast or whatever it is. But the point is, it's a time of self-responsibility more than ever. And that's why I'm such a silver nut, because it was the one chance for the people to take back the money power, because the banks don't control silver to a large degree. I mean, you have the bullion banks that do, but the general banking system at large doesn't control like they do in the gold market. So if enough people took silver in their own possession, then you would have a situation of probably the second most important element on the planet outside of oil would be silver, and we would have that power and maybe be able to negotiate some type of freedom, or at least perhaps get into a John Galt situation or whatever. So I'm off on a limb. I'll come back. You can bring me back. But it's upsetting to me that I think we worked pretty hard to try to bring at least the thought process to others of what they can control. And yet everyone seems to be much more inspired by some scam in a cryptocurrency they are in sound money that's existed for so long and proven how anonymous it is, how peer-to-peer it is, how quiet it is, and how worthwhile it is. And yet my own niece got on the phone with me or text, and she got into one of these crypto scams, and she's gotten in pretty far, and she wanted to know, should she give them her phone number? Absolutely not. In other words, I shouldn't say phone number, access to her phone. And I said, no, they're going to hijack it, and they're going to use your identity and everything else. And again, reel me in, but it just upsets me that we have a solution, or at least a partial solution. And yet, and you speak for yourself, you know me for years. I mean, you've been in the fight for a long time. I was probably your age when I started, but didn't have a platform. And, I was writing letters and dropping in mailboxes. But the point I'm making is, how much progress do you think we've made on this journey of ours to try to bring the truth and the money powers to at least be questioned by the general public?
As we move deeper into David Morgan's analysis, we approach a critical aspect of the potential surge in silver prices: the psychological and behavioral factors influencing investor decisions. Understanding the mindset of investors and the general public towards silver is essential in forecasting how these attitudes could drive the metal's price to unprecedented levels. Morgan emphasizes the growing public awareness and interest in precious metals as a safe haven investment, especially in times of economic uncertainty. With increasing discussions about inflation, currency devaluation, and economic instability, more individuals are turning their attention to tangible assets like silver, which historically retain value over time. This shift in investor sentiment is crucial, as it represents a broader change in how people perceive value and security in their investments. Furthermore, the allure of silver extends beyond its monetary appeal. Morgan points out that silver's practical applications in industrial processes, particularly in sectors committed to sustainable and green technologies, add an ethical dimension to investing in silver. As society becomes more conscious of environmental issues, the demand for investments that contribute to a sustainable future is rising. Silver, due to its essential role in renewable energy technologies, is increasingly viewed not just as a financial asset, but also as an investment in a greener future. Another psychological factor at play is the fear of missing out, FOMO, which can amplify market movements. As silver prices begin to rise, driven by the factors Morgan has outlined, the fear of missing out on potential gains could lead to an influx of investors into the silver market, further driving up prices. This behavior, often seen in bull markets, can create a self-reinforcing cycle of increasing prices and investment demand. Morgan also discusses the importance of narratives in shaping market trends. The story of silver transitioning from an undervalued asset to a critical component of the future's green economy is powerful. It resonates with both seasoned investors and the general public, creating a compelling case for why silver is poised for significant growth. This narrative, supported by the tangible factors driving silver demand and constrained supply, helps solidify the belief in silver's potential to reach $1,200. In this phase of Morgan's analysis, the focus on psychological and behavioral factors highlights the complex interplay between market dynamics and investor sentiment. By understanding how perceptions, attitudes, and behaviors can influence the silver market, we gain insight into the potential catalysts for a dramatic rise in silver prices. This perspective underscores the importance of not just the economic and industrial factors driving silver demand, but also the collective mindset of market participants in propelling silver to new heights.
Concern, again, I'll use the word I used last time, frustrating. I mean, it's not keeping up with gold, and last week it actually outperformed in a weekly basis. I know that's a very small data point, Elijah, but gold was up, I think, 6% or 5%, and silver was up like 13%. But here we are, several percent in one day. But it will, I still think, and not because of my bias towards silver, which I have, but the dynamics of silver are still so fundamentally strong, and there's so much push for this green movement. And then it's the poor man's gold, and I don't mind using that term, because if gold gets at a certain level, there'll be people that want to get into precious metals, and they'll look at their just savings account and they'll say, I really want to buy gold. I mean, a lot of them make the statement or the thought process: I want to buy gold. Gold's at 3,000 an ounce now. Silver's only at $30 an ounce. You know what? I'm going to buy silver. I'm going to get a lot more for my money. And that's sort of the penny stock game too. I mean, there's a lot of people that are not very sophisticated in the stock market, and really they'd be a lot better off with like one share of, pick IBM or something, rather than 100,000 shares of XYZ mining at 0.01 cent per share. But it makes them feel good having all those shares. They feel good because they own so much. So silver, you could put it in the same bed. Those are not a real good analogy, but you get my point that there's a certain trade-off as far as cost goes with the precious metals. And another one, and I'm in it, and I'm very biased now because I have a pretty good position. That's in the platinum market. I mean, platinum really hasn't participated in this move very much, but it's 15 times scarcer than gold, and it's half the price. So if it just gets par with gold, which it may not, but if it did, I mean, you'd be buying gold at half price. Something that if you're very sophisticated and willing to take at it.
In the eighth step of David Morgan's analysis, the spotlight turns to the intricate relationship between silver and the banking sector, specifically how silver's trajectory to $1,200 could be influenced by banking practices, financial regulations, and the evolving landscape of digital finance. Morgan scrutinizes the traditional banking sector's role in precious metals markets, particularly through the mechanisms of paper silver trading and derivatives. He notes that the vast majority of silver trading occurs in paper form, through futures contracts and other financial instruments, which can sometimes obscure the true supply and demand dynamics of physical silver. This disconnection between physical silver and its paper representation has the potential to create volatility and pricing anomalies, which savvy investors could exploit as these markets adjust to represent true physical scarcity and demand more accurately. Moreover, Morgan delves into the regulatory environment surrounding banking and finance, suggesting that changes in regulations could have significant implications for silver. Tighter regulations on speculative trading, increased transparency requirements, or shifts in monetary policy could all influence silver's market dynamics. A move towards stricter oversight of precious metals trading could lead to a closer alignment of paper silver prices with physical silver, potentially accelerating price movements. The analysis also explores the burgeoning field of digital finance and how innovations like blockchain technology and cryptocurrencies are reshaping the landscape of investment and asset ownership. While digital currencies offer a new frontier for monetary exchange, they also raise questions about the value and security of digital versus physical assets. Morgan posits that as digital finance continues to evolve, the desire for tangible, time-tested stores of value like silver could intensify, particularly in response to concerns about digital asset volatility and cybersecurity risks. An important aspect of this relationship is the potential for new digital silver-backed assets, which could bridge the gap between the tangible value of physical silver and the convenience and accessibility of digital currencies. Such innovations could attract a new wave of investors to the silver market, drawn by the combination of silver's inherent value and the flexibility of digital asset management. In concluding this phase of the analysis, Morgan underscores the potential impact of banking practices, financial regulations, and digital finance innovations on the silver market. As these factors converge, they could create a favorable environment for silver's ascent, driven by a combination of increased demand for physical silver, regulatory shifts aligning paper and physical markets, and the appeal of silver as a secure, tangible asset in an increasingly digital financial world. This complex interplay highlights the multifaceted influences on silver's price trajectory, illustrating how developments within the banking and digital finance sectors could play a pivotal role in propelling silver towards the $1,200 mark.
Get higher, higher, and higher. So let me say it: higher, lower, higher. Meaning, we probably will see the silver and gold doldrums in the summertime, where there's not much interest in the metals markets. Again, that's a probability. It's a high probability, not guaranteed. But there's so much going on. It's status quo. If nothing changes from where it is now, you're borrowing, $1 trillion at the clip that the U.S. is borrowing at. Your the war situation's no better or no worse. The geopolitical infighting between people that are coming to the fore that are populist versus people that are more authoritarian. I mean, everything that's as it is now doesn't change. It just remains the same. You're going to see higher prices. There's just too much going on in these markets that give people the uncertainty of what is their currency going to be worth in the future. And especially if you go into the third world where you look at, Vietnam Vietnam is not a really good example as far as population size, but they are looking at food prices that are going up at such a large clip that they do spend basically whatever they make, that week. I mean, it's pushing toward a hyperinflationary environment. And that's not just Vietnam. There are other smaller countries in the world that have faced that problem. So in those countries, they don't know the difference between the silver market and the silver retail market. They don't care. All they care about is that's a way to protect themselves. And so they may pay a high premium and not worry about it too much because in their currency, it's going to be higher no matter what. And that's kind of the situation that we as precious metals investors have to our advantage. Not that I'm pro-inflation. I'm dead set against inflation. But the idea is that this time it'll be a global market. So it'll be more than just a United States inflation problem. It'll be a global problem. And is inflation under control? Well, of course, the Fed's going to say it is. But in reality, it isn't. And that's why they keep delaying these interest rate cuts. And once the interest rate cuts take place, the signal to those that understand how money works, how the global cash flows operate, and what the U.S. is really signaling, they're throwing in the white towel and they're saying, we're done. We are going to cut interest rates and we don't care what happens to the dollar.
David Morgan's comprehensive analysis, we examine the critical role of geopolitical events and their potential impact on the silver market, paving the way for silver's remarkable ascent to $1,200. This step underscores how international relations, trade policies, and geopolitical tensions can significantly influence the demand for silver and, consequently, its price. Morgan highlights several key geopolitical scenarios that could play a pivotal role in shaping the silver market's future. For instance, tensions between major world powers can lead to increased demand for safe haven assets like silver. In times of uncertainty, investors often flock to precious metals, driving up prices. Furthermore, trade policies and sanctions can disrupt the global supply chain for silver, affecting its availability and pushing prices higher due to supply constraints. Additionally, Morgan points out that geopolitical events can also impact currency values. Fluctuations in major currencies often lead investors to seek refuge in silver as a store of value, further bolstering its demand. This effect is magnified in regions with volatile currencies, where silver becomes not just an investment, but a necessity for preserving wealth. Another crucial aspect Morgan considers is the role of geopolitical developments in the energy sector, particularly in relation to silver's industrial demand. For example, geopolitical events that accelerate the shift towards renewable energy can increase the demand for silver, given its essential role in solar panel manufacturing. Similarly, any disruptions to the oil market can have a cascading effect on the entire energy sector, including renewable energy investments, thereby influencing silver demand. Morgan also explores how geopolitical instability can lead to increased government and institutional investment in silver, both as a financial hedge and a strategic asset. In some cases, governments may increase their silver reserves in response to geopolitical uncertainties, further tightening the market. In weaving together the threads of geopolitical influence, Morgan paints a picture of a world where international events directly and indirectly shape the silver market's dynamics. He argues that understanding these geopolitical factors is crucial for investors aiming to navigate the silver market effectively. The interplay between geopolitical events and silver demand highlights the metal's dual nature as both an industrial commodity and a monetary asset. This analysis of geopolitical influences provides a deeper insight into the external factors that could drive silver's price to unprecedented levels. By acknowledging the complex global landscape and its impact on the silver market, Morgan offers a nuanced perspective that underscores the importance of staying informed about international developments. As these geopolitical scenarios unfold, they could create the conditions necessary for silver's ascent to $1,200, reinforcing the metal's status as a critical asset in a turbulent world. In the final step of David Morgan's analysis, We synthesize the preceding insights to understand the comprehensive landscape that could lead to silver reaching the milestone of $1,200. This step encapsulates the culmination of various factors: industrial demand, investment trends, monetary policies, banking and financial innovations, geopolitical events, and psychological influences on investor behavior, interacting within the complex ecosystem of the global economy and the precious metals market. Morgan emphasizes that the journey of silver to $1,200 is not predicated on a single event or trend, but rather the confluence of multiple interrelated dynamics that reinforce each other. The increasing industrial demand for silver, driven by its indispensable role in green technologies, electronics, and medical applications, sets a solid foundation for long-term demand growth. This is juxtaposed against the backdrop of a constrained supply, challenged by mining difficulties, environmental regulations, and geopolitical risks affecting major silver-producing countries. On the investment front, Morgan points out the growing recognition of silver as a hedge against inflation and currency devaluation. Amidst expansive monetary policies and fiscal stimuli aimed at countering economic downturns, the shifting investor sentiment towards tangible assets, amid uncertainties in the financial markets and concerns over digital asset vulnerabilities, further bolsters silver's appeal. The banking sector's evolving relationship with precious metals, through digital finance innovations and potential regulatory changes, could bridge the gap between traditional and modern investment realms, making silver more accessible and attractive to a broader range of investors. Geopolitically, Morgan underscores how events on the world stage can influence the demand for silver, both directly through industrial supply chains and indirectly through its impact on currency values and investment flows. The geopolitical landscape remains a wild card, with the potential to rapidly shift market dynamics in favor of precious metals like silver. In synthesizing these insights, Morgan articulates a vision where silver's ascent to $1,200 is a reflection of its growing importance in a world grappling with environmental sustainability, economic volatility, and the search for reliable stores of value. He advocates for investors to consider not only the immediate market indicators, but also the broader economic, technological, and geopolitical trends that will shape the future of silver. Morgan concludes his analysis with a call to action for investors to stay informed, adaptable, and mindful of the long-term implications of their investment choices. He suggests that those who understand and navigate the multifaceted landscape of silver investing, recognizing its potential in the context of global trends, could be well-positioned to capitalize on its journey towards $1,200. This comprehensive analysis provides a roadmap for understanding the potential drivers behind silver's future price movements. It offers a holistic view of the market, encouraging a strategic approach to investing in silver, informed by a deep understanding of the interplay between various global factors.